Hi, my name is Pia McAdams, and today I'm going to give you a quick phrase that will help you to remember the expanded accounting equation. All right, let's get started. Okay, the phrase is what you see. All I see is red. And keep in mind, this is going to help you to remember the components of the expanded accounting equation. So I talked last time in an earlier video about what the basic accounting equation is, but let's go ahead and review that. And the basic accounting equation, recall, is assets equal liabilities plus stockholders' equity. And in that video, I mentioned that if you identify an account as either a revenue or an expense, to just lump it in as a shareholders' equity account because it directly affects shareholders' equity. But today we're going to be talking about the expansion of the accounting equation, because starting from chapter 2 on, you will be using the expanded accounting equation. So again, all I see is red. So the A, all. The A is for assets. The L is going to be for your liabilities. The stockholders' equity is the SE. And then the red, R is for revenue. The E is for expenses. And then the D is for dividends. So again, this phrase, all I see is red, will help you recall the components of the expanded accounting equation. Now remember, it is an equation, so you do have to know that assets equal liabilities plus stockholders' equity plus revenue minus expenses and minus dividends. All right, so let's go and review first the basic accounting equation components. So we talked last time about assets, and just recall these are the things that the company owns. And so here's some example of assets. And again, this is not an all-inclusive list, but as you see, the items that you see on the screen, these are going to be ones that you see occasionally throughout the course. But again, depending on the company, it's going to determine what their assets are. But these are things that are going to bring in more money for the company. All right, liabilities. Keep in mind, we mentioned the last time that liabilities were the debts of the company. Another way to recall is that I said it was the creditor's claims to an asset, because again, there has to be a claim to an asset in order for it to be characterized as a liability. Now, one thing I want you to notice about the list is that majority of these accounts end in the word payable. So this is going to be a quick clue for you, a quick hint. If you read an account and it ends in the word payable, you can assume it is a liability. I'll say that again. If an account ends in the word payable, you can assume it's a liability. However, not all liabilities end in the word payable. As you can see on the screen, unearned revenue is a liability that doesn't end in payable. But if you're reading through a list of accounts and it says payable, you can assume it's a liability. All right, so that's a quick hint for you on the liabilities. And then stockholders' equity, again, this is what the company was left over after you sell your assets. So a more formable definition for this is going to be the owner's claim to the asset of the business, right? So again, the owner's claim of the asset of the business. Now, fortunately, in this course for you, there's only going to be really 2 equity accounts that we're going to be talking about for the majority of the course. And I think a later chapter, maybe like 13 to 14, will introduce a couple more. But for right now, the only equity accounts that you have to know about is common stock and retained earnings, okay? All right, so that's going to be the review of the basic accounting equation components. Now let's go ahead and review the red, or the revenue, the expenses, and the dividend accounts. All right, so what are revenues? Well, the definition of the revenue is that it's the amount of money received in exchange in a normal course of business, in exchange of like selling something or providing a service or selling something, okay? In a normal course of business, that's going to be considered a revenue. And then you're going to see at the bottom of the screen some examples. Again, this is not an all-inclusive list, but these are the ones that you will see occasionally. And then we have expenses. Well, what are expenses? Well, expenses are a cost of doing business. And again, as you see on the end, on the bottom, there's some list of examples. If the word ends in expense, then you can assume that it is an expense. But again, not all expenses end in the word expense, as you see on the screen at the very bottom. But just like the liabilities that end in payable, if an account ends in expense, you can assume it's an expense. And again, keep in mind that first-year students generally get confused between a liability and an expense. The definition of a liability is that there must be a claim to an asset. It's the creditor's claim to an asset. And then review the last video where it lists 3 categories or 3 characteristics in order for it to qualify as a liability. Expenses are a cost of doing business. And then last but not least, we have the dividends. And then for the dividends, this is basically a return of capital, but for our purposes, we're going to say it's a reward. It's going to either be cash or dividend or otherwise that the company gives to its shareholders. Okay, so it's a return of capital. In other words, this is not a business. This is not a business transaction per se. It's basically taking money away from the business. Okay, so we'll get into a little bit more detail about how dividends, but this is probably of all the accounts, this is going to be the easiest, is dividends. There's only one account for the majority of the class that you have to worry about, and it's really cash dividends. Okay, so again, dividends is basically a reward. It's a return of capital to the owner. All right, so to summarize, just remember the phrase, all I see is red. That will give you the components to the expanded accounting equation, but it is an equation. So just remember, assets equal liabilities plus stockholders' equity plus revenues minus expenses and minus dividends. All right, so let's give you an opportunity to earn a golden ticket for this week. So this week, what I'm going to do is I'm going to post a list of accounts. Okay, and what I want you to do is classify the accounts according to the 6 classifications. What are the 6 classifications? Assets, liabilities, stockholders' equity, revenue, expense, or dividend. Okay, so again, there will be a list and I'm going to post in the announcement. And what you want to do is you want to classify them according to this one of the 6 classifications. And by the way, once you classify an account as, let's say, an asset, it cannot be classified as anything else. There's only one classification per account. Okay, so that's going to be due on Sunday, this coming Sunday, whatever the date is, by 11:59 p.m. Eastern Standard Time. Okay, so that's 8:59 p.m. Pacific Standard Time, and any other time zone, you got to figure it out. So email that to me, and if you get at least half of them correct, I will give you a golden ticket. All right, thank you.